Good evening, everyone. Welcome to the channel. Today I am going to talk about EB Environment Interim Report. Do note that this is not a financial advice or a buy or sell call. All content are AI generated and is not associated with anyone. China Everbright Environment Group Limited provides a wide range of environmental solutions worldwide through its various business segments. The company's services include environmental energy projects, food and kitchen waste treatment, leachate and fecal treatment, sludge treatment and disposal, fly ash landfill, medical waste, and solid waste treatment, waste-to-energy and methane-to-energy plants, waste sorting and renewable resources, utilization sanitation operation services, integrated biomass utilization, hazardous and solid waste treatment, solar energy and wind power projects, environmental remediation services, wastewater treatment plants, water supply and reusable water treatment plants, and sponge city construction, sludge treatment and disposal, leachate treatment, river basin ecological restoration, and wastewater source heat pump, projects research and development of water environment technologies, and engineering projects, environmental protection technology research and development equipment, construction and installation services for environmental protection projects, designing environmental protection projects, manufacturing environmental protection equipment, collecting and treating municipal wastes using mechanical and biological technology. The significant increase in AeroVironment's AVAV stock price over the past year can be attributed to a combination of factors. The company's strong financial performance, driven by record revenue and adjusted earnings per share that exceeded analysts' forecasts, has been a major catalyst for investor confidence. Additionally, the strategic acquisition of Blue Halo has expanded AeroVironment's capabilities in critical defense technology areas, positioning it as a global leader in the industry. Favorable government policies, particularly President Trump's executive orders aimed at boosting the U.S. drone industry, have also contributed to the surge in stock price. These directives are expected to accelerate domestic drone production and promote the commercial development of unmanned aircraft systems, UAS, creating a long-term benefit for U.S. drone manufacturers like AeroVironment. Furthermore, increased demand in the military drone market, driven by the effectiveness of AeroVironment's products in recent global conflicts, has also contributed to the stock price increase. Analysts' positive sentiment and increased price targets have further reflected optimism about the company's future growth prospects, solidifying its position as a leader in the industry. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth: increase in heat and steam supply volume from relevant projects, plus 27%. Green certificate transaction volume increased by nearly 2 times. Biomass fuel unit purchase price declined by 8%. Overseas business expansion, merger and acquisition activities, technological innovation and new growth drivers. Revenue decline. Revenue decreased by -8%, pages 6 and 7. Decrease in green tech project construction services, -49%. Other revenue decreased by 33.3%. Net income and profit margins. A shift in performance. The financial performance of a company has undergone significant changes. Notably, net income has seen a substantial increase of 30%. This upward trend is a positive indicator of the company's growth and success. However, profit margins have experienced a mixed outcome. EBITDA, earnings before interest, taxes, depreciation and amortization, has decreased by 11%, indicating a decline in operational efficiency or increased expenses. On the other hand, net profit attributable to the group has also risen by 30%, mirroring the increase in net income. The disparity between EBITDA and net profit suggests that the company's financial performance is influenced by factors beyond its core operations. This could be attributed to changes in interest rates, tax policies, or accounting practices. Despite this, the overall trend of increasing net income and net profit indicates a positive direction for the company's financial health. The company is generating positive operating cash flow. This is evident from various financial summaries that indicate a steady increase in net cash generated from operating activities and operating cash flow over the years. Specifically, the figures on page 96 show $974,715 2025, while page 97 shows an even higher figure of $6,565,923. Additionally, pages 118 and 132 confirm a positive operating cash flow with estimated amounts of $2,041,970 and $1,000,000 $266,791 respectively. The company's debt level and interest expenses have undergone significant changes. Notably, the interest-bearing borrowings, unsecured, increased by a substantial 34% from $14.33 billion to $19.19 billion. However, secured interest-bearing borrowings decreased slightly by $0.5 million. On the other hand, interest expenses have seen a decline in various areas. The interest on corporate bonds, ABS, and MTNs decreased by $63,011, while total finance costs dropped by $197,014. Additionally, interest expense was reduced by $6,965. These changes suggest that the company has made efforts to manage its debt and reduce its financial obligations. The company's financial performance varied across different segments in 2025. Notably, the environmental energy project construction and operations segment experienced a decline in revenue from $490,923 in 2024 to $7,492,861 in 2025. On the other hand, the green tech project shone with a strong performance of $3,399,409. The water project also performed relatively better than the construction and operations segment. In contrast, the others segment had a weak performance of $156,371. These results indicate that while some segments excelled, others struggled to meet expectations. Management is outlining a comprehensive strategy to position the company as a world-class environmental service provider. Key initiatives include implementing the 15th Five-Year Plan to drive growth-enhancing financing options and managing foreign exchange risks, proactively adapting to stricter policies through business optimization and regional diversification, diversifying revenue streams across various segments, including biomass utilization, waste treatment, renewable energy, and environmental technology research. There were no notable acquisitions or divestitures in the company's financial activities. This indicates a stable and consistent approach to business operations, with no significant changes in assets or ownership. The company has a history of paying dividends to its shareholders. In fact, it has been explicitly stated that dividends paid, yes, on page 11 of the financial summary. Furthermore, the interim dividend for the current year is $15 per ordinary share, an increase from $14 in the previous year. Additionally, a final dividend was paid in respect of the previous financial year at $9 per ordinary share, up from $0 in 2024. That concludes the financial summary for EB Environment. Feel free to comment below, and I will be happy to answer them when possible.